Saif, you did propose a way that Bitcoin could kind of prevent a hyperinflation, or at least make the transition more peaceful, which is something that I really liked. And you said Bitcoin could be like someone skillfully dismantling the fiat house of cards into a deck of cards by removing each set of two cards leaning on each other at the same time, the card of fiat demand and the card of fiat supply. That's how you take down the house of cards. That's how you prevent it from crashing down. And I would love it if you just kind of expand on that, because I think it's kind of hopeful that Bitcoin could kind of operate alongside fiat and actually help kind of slowly dismantle it instead of this kind of more doomsday crash scenario.
Yeah, I think as I was saying earlier about the kind of difficulty adjustment in fiat. So as I was kind of concluding the book, I realized like this can go on, and it's going to continue to devalue. You're not going to get hyperinflation, but the money supply, the money is going to continue to lose value as it is designed to do. You can argue about 1%, 2%, 3%, 5, 6, 7, 8. We're arguing numbers here, but ultimately nobody disagrees that the money is losing value. And on the other hand, Bitcoin has number go up technology, wherein the money is gaining value. So, you can keep extrapolating this. It might be a year or 10 or 100. Ultimately, that dynamic, I think, because of just the scarcity of Bitcoin and the profligacy of the creation of the fiat money, is going to likely continue for a while. And I think as long as you have this dynamic wherein credit is being created in that way and destroyed in that way, you're not going to get these massive hyperinflationary collapses of fiat money, but you're just going to witness the fiat economy um, grow less and less as a percentage of the global economy. Which is, if you think of Bitcoin as a global economy, it's been increasing as a percentage of the global economy over the last 14 years. Extrapolate that further. Nobody really has a magic ball to tell how quick, how fast, and how often we get there, how fast we get there. But it depends on how much credit creation you have, how much credit destruction you have. But if you were to look at the past 60 years, there's no reason why it can't go on for another 60 years, perhaps, wherein you have in these kind of well-run, relatively countries, 7, 8, 9% per year increase of the money supply. And then over time, the value of that economy continues to decline, whereas the value of the Bitcoin economy continues to grow because people who put wealth in Bitcoin witness it appreciating in real terms because the supply is only increasing very little. So over time, effectively, there's no need for this to be any kind of cataclysmic event. There's just in the same way that computers took over market share from typewriters. People continued to use typewriters, and people started using computers. And over time, more and more people realized, yeah, no, I could just get myself a computer and a printer, or sometimes not even a printer. But over time, the typewriter industry kind of went out of business, and the computer industry grew to become much larger. It wasn't cataclysmic. Some people lost some money in typewriter businesses, but generally, if you're a capitalist in a typewriter, investing in a typewriter company, you're taking on risk. So it's generally, this is how the market handles disruption. Slowly over time, um, the people who are into typewriting, whether they're typewriters or producers of typewriting or people who buy those things, one by one, they make their way to the new economy, and eventually they benefit from the increase in productivity. And I think we could see something similar with Bitcoin and fiat. The fiat economy becomes progressively a smaller thing as the Bitcoin economy continues to grow. If you accept, the premise that Bitcoin continues to grow, obviously, but if you do, then it is possible that this happens. I think there's no reason why Bitcoin would cause hyperinflation, because I think, remember earlier in the book, I was saying that the way that fiat creates money, fiat mining happens, is through the creation of credit. And so, therefore, when people start using Bitcoin as a form of saving, they become less likely to take out credit. And perhaps more importantly, they become less likely to buy credit instruments as a form of saving. In other words, buying bonds. So Bitcoin decreases the supply of fiat as well as decreasing the demand for fiat. So people think, oh, everyone is going to dump their dollars and buy Bitcoin, and the price of Bitcoin is going to go to the moon, and the price of the dollar is going to go to zero. Well, nobody really has any dollars. I mean, obviously, a lot of people have a lot of dollars. There's a ton of dollars out there, and they're always making more. But really, the people who have significant wealth have negative fiat balances. So the richest people in the world, Jeff Bezos doesn't have $120 billion of cash or whatever it is sitting in a vault somewhere in Amazon headquarters. He's got stocks and credit instruments. Um, he doesn't have liquid cash. And so if Jeff Bezos was to get rid of his dollars because he's afraid of hyperinflation, yeah, I'm sure he'll sell several million, maybe even billions. Who knows? I doubt he's got a billion in cash, but he'll sell some of that. So that would, decrease the demand for dollars in a sense. But most likely he's got a tiny fraction in dollars. Most likely what he's going to sell, serious money, the rich people and the institutions that have the vast majority of money, they don't hold it in cash. They hold debt. And so if they shift to Bitcoin, they drop their bonds, they drop their denominated bonds and hold Bitcoin. That is far more economically significant than them dropping their checking account balances. Because you could be a billionaire and your checking account is like, I don't know, I'm not a billionaire myself, so I wouldn't even know. But, it could be a few $1 million, which is relatively insignificant compared to the more serious amount of assets you would have in bonds. And so, if these billionaires and large asset owners and large asset allocators and financial institutions and institutional investors and sovereign wealth funds and so on, if these people start shifting away from holding, if we do witness a shift away from dollars to Bitcoin, it's not going to be most significant that they're shifting out their checking account. It's going to be far more significant that they're shifting out their debt holdings. And so
Yeah.
they are reducing the creation of fiat as well as the demand for it. So they're getting rid of this checking account, which is likely insignificant compared to the amount of dollar denominated debt instruments, essentially. And so the treasury on its own is about 25, $26 trillion or so, or something like that. And then, other credit and debt instruments are many dozens of trillions of dollars more. So if Bitcoin eats into that, which you would expect it to, because I don't think it's just going to continue to eat from pocket cash. It's eating away. If you ask what Bitcoiners are doing, they're diversifying not out of their pocket change, not out of their checking account. They're diversifying out of their savings account. I mean, to be fair, a lot of it I'm sure would have stayed on checking accounts. But I think a lot of it as well is, somebody like Saylor, which is ultimately we're talking about magnitudes. He would have been holding government bonds. This is what he would have been holding if he wasn't holding Bitcoin. This is what he was usually holding before interest rates crashed. So, um, in this regard, I think if you continue with a credit based system, I know I've gone on forever on this, but I'm trying to summarize like a lot of chapters of the fiat standard. I may not be doing it justice, so I'd urge you to pick it up and read it. Um, but the summary of all of this is that Bitcoin, more significantly than taking away the demand for dollars, it takes away the demand, it takes away the supply creation mechanism of dollars by disincentivizing people from a buying into debt, in other words, lending money out, and taking out loans. And so you stop taking out 1 million loans as a Bitcoiner and you start just living out of savings. And I think this becomes more and more common. And so, therefore, less fiat debt is created. And therefore, you don't get a hyperinflationary situation. In fact, you get, the continued, what I would say is devaluation of fiat, because ultimately they're not going to get it, they're not going to let it get negative in terms of its supply creation, because governments are still going to take advantage of it and print money and hand out money to their cronies. But there's going to be a lot of money supply destruction, I think, because of, on the one hand, what we mentioned earlier in terms of credit market failures, But on the other hand, if Bitcoin is rising, and this is the premise here that we begin with, if Bitcoin rises, then a lot of that demand for credit creation is going to go to buying Bitcoin. And so therefore you just witness, like with the computers and typewriters, you witness an increase in the size of the computer industry or computer-based money industry, the Bitcoin, and a slow ebbing away of value in the fiat economy. And eventually people get the hint. And I think, perhaps the kind of rose tinted glasses way of looking at it is that as soon as you realize what is going on, why get angry? You just join Bitcoin. And I think this is like, as long as you're asleep and you're happy to play along and you believe your local fiat overlords' propaganda about inflation being transitory and um, tiny, then things are fine for you and you have no reason to get angry. As soon as you figure out what's going on, you could get angry or you could start stacking sats, which is a much more productive use of your energies than anger. And so, therefore, I think, similarly, like if you're into the typewriter industry, like if you're an investor in typewriter industry and you get what's going on, you're not going to go out there and destroy Apple and Hewlett Packard and IBM. You're going to invest in them and make money. Like it's just, here's what's going on. You get it. So I think this is kind of my rosy scenario where how Bitcoin and fiat coexist for a
Yeah.
while, and Bitcoin continues to rise, and fiat is, slowly taken to its resting place of economic insignificance, where less and less economically significant people continue to work in and for governments, doing less and less consequential things over time, and getting paid in less and less valuable little fiat tokens and playing them, putting them in their
Yeah.
casinos and slot machines of financial markets over time, while all the grown-ups move on to real hard money. But I should say,
That was great.
I still should say, I still end the book by saying, like, this becomes less and less likely the more we are likely to see things like the central bank digital currencies, because they just make this a moot point, because it's no longer about credit creation. They're just going to print money and give
Yep.
everybody all the money that they think that they deserve. In which case, fasten your seatbelts. All of these rosy scenarios are not going to come good. Who knows? We'll see.
Mm.